Hey everyone, it's Julie here with TipRanks, and today we're taking a look at 3 high-yield dividend stocks with unanimous strong buys. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 high-yield dividend stocks, all with dividend yields over 5% that come in with all buy ratings from Wall Street analysts. We're going to take a look at these companies, what it is that they do, and what those analysts are predicting for the stock's future. We came across these stocks taking a look at the TipRanks Best High-Yield Dividend Stock list. Found underneath the dividend menu, here we're going to find some of the highest yield dividend stocks that currently score an Outperform on the TipRanks Smart Score, so an 8, 9, or a 10. We then narrowed it down looking for a solid blue circle of analyst ratings. And just before we get into our 3 stocks today, this is a reminder that if you enjoyed the video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's dive right into our 3 unanimous strong buy high yield dividend stocks. First on the list, we're taking a look at Euroseas. They trade under the ticker ESEA, currently priced just above $44 per share. In the past year, they've climbed 69%, and in the last 3 months are up about 15%. They currently score a 9 out of 10 on the TipRanks Smart Score. Euroseas is a shipping company focused on ocean-going transportation services. Euroseas was established in 2005 to consolidate the shipping interests of the Pittas family of Athens, Greece, who have been in the shipping business for over 140 years. They employ their vessels on spot and period charters and through different pool arrangements, and have a fleet of 23 vessels, including 16 feeder container ships and 7 intermediate container ships with a cargo capacity of over 67,000 TEU. Euroseas pays out their dividend on a quarterly basis, and the most recent quarterly dividend came in at 60 cents per share for a dividend yield of 5.16% and a very healthy payout ratio at about 13.6%. And back in August, the company came out with a solid earnings and revenue beat. For their Q2, the company reported earnings per share of $5.84, beating expectations by over $2 per share. Revenue came in at $58.7 million, beating by over $11.5 million and growing 23% year over year. Just today, an analyst from Alliance Global reiterated a buy rating on the stock and commented on some of the recent port strikes and their impact. They noted that any stock price weakness is likely to prove to be temporary. Potential labor issues at several U.S. ports, which could have further supported container ship rates, have been pushed out into next year, and forward charter cover is high over the next year. They added that they believe several container ships are well positioned to secure attractive time charters in the fourth quarter, which would further improve forward cover. Euroseas does just have 3 current analyst ratings, but all come in with a buy. And their average price target of $59.33 imply an upside potential of 34.5%. Looking at those ratings down below, fairly closely grouped together here, our low end is $55 for an upside of 24%, while our high end is $63 for an upside of 42%. Second on our list of stocks today is a company called OPRA. They trade under the ticker OPRA, currently priced at $14.46. In the past year, their stock has climbed 35%, and in the last 3 months has gained 10%. They currently score a 10 out of 10 on the TipRanks Smart Score. OPRA is a web application development company. Their mission is to help internet users discover and access digital content and services in a fast, easy, and personalized way. They design and develop web browsers for mobile phones and PCs that enable internet users to discover and access digital content. They do gaming, news, advertising, web, e-commerce, and browser configurations. They just recently started paying a dividend and do so on a semi-annually basis. And their current dividend comes in at 40 cents for a dividend yield of 5.29% and a healthy payout ratio at 40%. They reported both an earnings and revenue beat for their Q2 back in August and also came out with guidance that was ahead of expectations. They reported Q2 earnings per share of 22 cents, beating estimates by 5 cents per share, and revenue grew 17% year over year to $109.7 million, beating estimates by $1.18 million. Their advertising revenue increased by 20%, and the company increased both their revenue and adjusted EBITDA guidance for the year. Just last week, on October 1st, we did have a 5-star analyst from TD Cowen give the stock a buy rating. Their rating was based on the anticipation of positive market reception to OPRA's upcoming product launches, which are expected to appeal to the company's target audience of higher value users in markets that are either underserved or not well catered to. He believes that the company's culture and proactive attitude position OPRA favorably for continued robust revenue growth and strong cash flow generation in the coming years. The OPRA stock is rated a unanimous buy with 4 current analyst ratings. And their average price target comes in at $22.63, implying an upside potential of 56.5%. Looking at those ratings down below, once again, all well into the double digits. Our low-end price target comes from Goldman Sachs at $19.50 for an upside of over 34%, while our high-end price target is that recent buy from TD Cowen at $25 for an upside of over 72%. If you've made it to our third stock today, then this is a reminder to make sure you hit that thumbs up button. Our third dividend stock is Provident Financial Services. They trade under the ticker PFS, currently priced at $17.91, having climbed 25% in the past year, and in the last 3 months have actually gained over 27%. They currently score an 8 out of 10 on the TipRanks Smart Score. Provident Financial Services operates Provident Bank, which was established back in 1839. They offer a variety of personal banking, business banking, and wealth management services, including deposits, account checking, savings, insurance, loans, and investment management, Provident investment, and fiduciary services. They have a dividend history going back decades, and they do pay out on a quarterly basis. Their current quarterly dividend comes in at 24 cents per share for a dividend yield of 5.36%. And they also had an earnings and revenue beat for their last quarter back in July. Their next report is due out in just a few weeks on October 29th. For that third quarter, analysts are anticipating earnings per share of 48 cents. This follows their Q2, during which they did complete a merger with Lakeland, and they reported earnings per share, or loss per share, of 11 cents actually, which was 1 cent better than expected, while revenue of $166.75 million grew 40% year over year, beating estimates as well. And following that earnings report back in July, we did have an analyst from RBC Capital increase their price target on the stock. They noted that the company's reported results reflected the Lakeland merger impact on its core earnings per share, and that their core fundamental trends were solid with strong reported margin expansion, manageable expenses, and healthy credit quality. Provident Financial Services also has 4 current analyst ratings, all giving the stock a buy. And their average price target of $21 implies an upside potential of over 17%. Looking at those ratings down below, 3 out of 4 analysts increased their price target following that earnings report. On the low end, we do have Piper Sandler here with a pretty flat price target at 0.5% upside, and our high end comes in at $24 from D.A. Davidson with an upside of 34%. So that is a quick look at 3 unanimous strong buy stocks, all with a high dividend yield. Let me know your thoughts on these companies in the comments down below. I always appreciate hearing from you guys. Of course, keep in mind these videos are never a suggestion to buy or sell any specific stock, just sharing what those Wall Street analysts are looking at. So please make sure you always stick to your own investment plan. Thank you guys so much for watching. I hope you have a great day, and I'll see you back here next time.